Good afternoon, everyone. My name is Janet Wright with USDA Farm Service Agency's Outreach Office. I have with me today Tamara Cushing from the University of Florida, and she's going to speak to us today about determining if your forestry is a business or investment. And so before we get started, just some housekeeping. She's going to field questions at the end of her presentation. So put your questions into the Q&A box and she will field them at the end. And so with that, I'm going to turn it over. Tamara?
Great, thank you, and welcome everyone. Today we're going to talk a little bit about thinking through whether the activities on your property are considered a business or an investment, and why in the world that matters in the first place. So as we get started, I just want to do a quick acknowledgement that this work is supported by USDA under an agreement, and this is information that is provided for educational purposes for you and is of course not endorsed by USDA. This was a tax and financial education project, again, funded by USDA Farm Services Agency to put together tax-related educational materials. And this is really focusing on beginning farmers and ranchers, socially disadvantaged landowners, and anybody else who's actually interested in this. So you can scan the QR code on your screen, and that will take you to a website hosted by Utah State University called ruraltax.org. Ruraltax.org is a landing place, if you will, for material that is developed, managed, and owned by the National Farm Income Tax Committee. That is a group of extension folks that are in ag and natural resources who are putting material together related to ag, timber, and rural tax topics. If you go to that website, you'll find webinars, publications, fact sheets related to disaster and weather losses and how to treat that, what to do with government payments, farm losses, hobby rules, self-employment, what is basis, like-kind exchanges. It's just a really good landing place to kind of find a collection of tax resources specifically related to rural lands. They're all reviewed by a committee of us, and so it's multiple people working on this. So as we get started today, I want you to take a second and kind of think about your property. And as you're thinking about that property, I want you to describe it. And of course, just how would you tell somebody about that? And in my experiences talking with landowners and hearing from landowners and farmers and ranchers and those who work in this rural space, this is kind of the things I hear. They're interested in the wildlife that's on the property, right? Maybe they're hunting the wildlife, but they want to make sure that the deer, the quail, the turkey, whatever species is out there, they're concerned about it and they enjoy having it out there. Maybe you tell me about hiking and enjoying the property, walking on it. It's a very scenic place for you. It's got aesthetic value. Surveys of from a National Woodland Owner Survey tell us that the aesthetics and the peace and tranquility of your property is a primary reason for owning property. Maybe it's about going out there and being able to just chill and get away from it. You come home from work, you get a chance to get away from it, listen to the birds, just breathe in the clean air. Or you tell me about going to the pond on the property, fishing with the grandkids. All these are fabulous things about your properties and wonderful things to hear and know. The problem comes about when you're talking to someone from the IRS, or you're talking to your tax preparer or your accountant for the first time, and you start describing your property in these ways. Because what I haven't mentioned in any of this is any revenue sources. All of these, while lovely and wonderful things about our properties, they don't actually tell me that you're trying to make any money off of it. Why does that matter? Well, if we're trying to talk about taxes, The tax code doesn't really allow us to deduct expenses related to hiking on the property or, stocking the pond with fish for your grandkids. So I want you to take a second now and think about your goals for the property. And maybe this is unfair because I changed the question a little bit, but I want you to describe it now, thinking about what you're actually trying to do out there. And I bet now that I've asked you the question a little bit differently, and of course, if you go sit with an auditor from the IRS and they're looking at your expenses and your deductions and your income treatment, they're going to just ask you to talk about your property. So I need you to think about when that question comes up, to think about your goals. Is it revenue generation? Is that one of the things that's important to you? Making sure that the expenses are covered from management of the property. Maybe it's creating good habitat by managing the timber on the property, and you're going to do that by harvesting timber. Is it recreation orientation on the property, and that you're going to build trails, make it so that others can hunt on the property, right? And so these are a little bit different than describing all the things that you love and appreciate and are passionate about on the property. So when we step into the kind of this tax world, which is how I want to frame all of this, is all those things are wonderful objectives to have on property, and we can have the same. I'm going to back up. These goals and these other things that we like about the property, they can coexist, and they usually coexist. The question is, though, what is the primary purpose of owning the property? And that's what folks that are asking you about your goals and objectives on the property, that's what they're trying to get from you. Because what they ultimately want to do is put you in one of these four broad categories. This is how, for tax purposes, we classify ownership of an asset, of property. And so we're going to talk about business versus investment versus these two that I split out that have a lot of similarities, but personal versus hobby. And I'm not going to cover them necessarily in the order presented here. You'll kind of gather why in a minute. All right. So if we talk about personal use, if I think about property that's personal use, it's owned primarily for recreation and for my personal residence. And maybe it's not even the house I live in all the time. Maybe it's a vacation property, right? I've got a cabin there. The only harvesting I do on the property is for firewood, to to burn in the fireplace in the cabin, right? Or it's actual fire, it's harvesting timber to build the cabin itself. That would be mostly what is happening as far as activity out there related to the timber on it. And so what you hear in these activities in this description is there's very little, if any at all, profit motivation, right? We're just trying to do activities that allow me to enjoy the property, get away from it all, entertain the grandkids, bring the family together. And maybe just cover the bills being the property taxes, the insurance on the property, and any materials that I need to build the dock, right? And so that would be what I would consider personal use. Most folks can really clearly tell if they're in this category. It's this is how you think about it, and you're really not interested in cutting timber. And again, there's nothing wrong with this category, but it does have some tax ramifications. Next, I want to talk about the investment category. So the investment category is where we start talking about profit motivation, right? I'm expecting this to make me some money at some point. And so think about owning stocks, think about buying a piece of property that maybe you never visit. Maybe you do visit it, but the entire intention of it is hoping that it's eventually going to appreciate in value and you're going to sell it and make money off of it. So this is usually something that you're maybe entering into for some speculative purposes on land value increases. Maybe it has timber on it and your intention is just to clear cut some timber at some point or do a thinning at some point with the intention of covering college or covering retirement for yourself, right? And so one of the key pieces on an investment is we don't have frequent income production. So this is not something that is going to produce income on a regular basis. You're also not necessarily having a lot of activity on it on a regular basis. This is where forestry gets really interesting. So these are kind of general things that we would say, regardless of what the asset is. It could be a farm, it could be any kind of business that you're involved with. Where this becomes interesting in forestry is we very infrequently have regular harvests, right? It takes a lot of acreage to have regular harvests. And by regular, I mean like even every 5 to 10 years, right? Even for some folks, 20 years would be frequent. And so we have trouble with this kind of frequent income production concept, right? And so to get out of this investment category and to go somewhere else, either you need to have larger acreage where you can be harvesting around the property because it's big enough to give you frequent, meaning less than every 20 years, even here in the South. Or you just have to have, big enough acreage that, yeah, big enough, sorry, just big enough acreage that you're cutting frequently on different parts of the property. So splitting this income investment in business is where the trick is, right? So the business category is again profit motivation. We said the same thing on the investment is it's that profit motivation. The difference between a business and investment is the frequency of income and activity. And you see there's no hard and fast numbers showing up on these slides. And you're hearing me trying to differentiate for you what this means. Regular and continuous activity, again, if I have a very large holding, maybe it means that I'm out there all the time having to do something on the property versus only having to go out there every 6 months to a year just to make sure everything is going okay. And that's not even to say that that would be a doom into the investment category. Some of the indicators that might tell you that you're in a business is if you're carrying this on for your livelihood or for profit. So I need to have the income from this operation in order just to pay my bills for living, right? So this is an integral part of our livelihood as a family. There are regular transactions. And so the regular transactions may not all be positive, but you have more regular transactions. And we see an increase in time spent working on the property. That's not to say that somebody that's in it as an investor doesn't spend a lot of time out there, but it's just kind of what we're working on and kind of the scale of what's being worked on. Again, this is not black and white between an investment and a business. So let me try to help tease it out a little bit more. So again, there's no hard and fast rules. There's no line in the sand. If you do X, you're a business, and if you don't, you're an investor. We don't have that. This becomes a whole lot clearer in other types of ventures when you have these very long-term investments like forestry, where you have long periods of time between any income. You see this becoming a very challenging thing to differentiate between an investment and a business. So let's talk about maybe profit now versus profit later. So if I'm thinking about this as a business, I really kind of need profit sooner rather than later. I need this to kind of keep bringing money in. I've got bills to pay on it. Again, this may be my only source of income versus if I'm an investor, I may be in it more for the long game. That what I need is that when I bought it, I wanted a return of 5% over the time period that I own it. And so that investment needs to show up as a return, maybe from timber income, but it could also be from an appreciation in value of the land. Somebody in the business may not be looking for the appreciation and value in the land. They may be really looking more for the timber income because they need something that happens more frequently. Again, that can be very challenging for us. We can also talk about whether there's other income for you. So when you're in the business, typically you are working to earn the money, right? You think about the shopkeeper. When they're actively in the business, they are there working, right? They are putting in extra hours. Sometimes they're not even able to pay themselves at the beginning, but they're working to try to get the business to pay money back. Versus when you're an investor, you want the money to work for you, right? So I invest in the stock market, and the stock market and my broker, they do the work for me. And then eventually I get a return from it. And so that can be kind of one of those things that we can look at. Often, though, what happens in forestry is this dividing line that doesn't exist between a business and investment is this collection of what is known as facts and circumstances. And so I will step back if I was an auditor and start looking at all the pieces. What's going on here? What is typical for a forestry operation? So if I'm in the Northeast, or the Midwest or the Western states where we have much longer rotations, I can look at the facts and circumstances, look around and say, well, everybody who's in forestry that's in the business, they're running on this type of a rotation. These are the type of activities. This is the frequency we would expect to see. We acknowledge that this is what a business looks like over here. And the subject property or the taxpayer that I'm auditing right now looks very similar to this other, what we would deem a business, right? And so they're putting all these pieces together and saying, does this make sense? Are all reasonable attempts being made to make a profit in this and being driven like a business? So the last category, and on that slide in the beginning where I showed you the 4 categories, there's a reason I'm talking about this one last. Being categorized as a hobby is not what you want. And I differentiate the hobby from the personal use. The personal use, a lot of times, you're cutting timber and you're using it to build your cabin, or you're selling a little bit of it for firewood and then using the rest of it. Hobby is really not engaged in for profit, and it looks and has a lot of similarities to that personal use category, and you'll see it as we go along. But the worst thing that can happen is for you to call your activity an investment or a business, and the IRS to come in and deem it to be a hobby. Hobby has a lot of detrimental effects to it. And there's some things that you can do to protect yourself from being deemed to be a hobby. But it's one of these words, I put it in red, because you should never refer to your forest operation as a hobby. If that comes out of your mouth, if you deem it and you call it a hobby, you talk about all these wonderful fun things you do on it, this is the danger, is that you'll get deemed to be a hobby. And I put this picture of horses on here because this is where the hobby rules really came from, was people that have horses. And so think about it kind of in that vein, that am I raising horses, working with my horses to actually try to gain income from it, or do I just love horses and I want to ride them? And that's kind of the mentality that's brought to this kind of hobby conversation. But at the end of the day, just like personal use, there is no intention to make a profit from it. So I don't want to scare you on the hobby words, but I do want you to hear it loud and clear and be concerned about it. Because one of the things that we hear in the industry is that what the IRS is looking for is those folks who actually should be considered a hobby that are claiming to be in the business or as an investor. So we have this presumption of profit motive, right? Because that's what you're ultimately trying to prove. To get out of the hobby or the personal use category, what you're trying to prove is some kind of profit motivation. So this presumption of profit thing exists with the IRS, and they're looking for a profit in 3 out of 5 tax years. That's tough, right? 3 out of 5 tax years. So if I look at the last 5 years and my tree farm is 10 years old, I don't have a profit in 3 out of the last 5 tax years. That's not happened in the past. That's not going to happen in the next 3 out of 5 years. Maybe in the South, if I was at 15, I could point to this and say I have a profit in 3 out of the 5 tax years. So this presumption of profit motive is pretty challenging for us in forestry. You don't actually have to make a profit to be operating a trade or a business, but you have to show this profit motive. So this presumption part and allowing you to point at 3 out of the last 5 tax years as proof that you have a profit motive is great to help you get there. There are other ways to prove it, but this is the presumption. Your management plan is one of these ways that we can help show a profit motive. And so as we sit here today, if you don't have a management plan, I'd like to encourage you to get a forest management plan, or you may hear it referred to as a stewardship plan. The differences between them are kind of minor. A management plan might have the current timber that's out there and what it's actually worth. You would not necessarily see the economics end of it in a stewardship plan. But regardless, either a management plan or a stewardship plan always starts with what are your objectives. And so, as a forester, when we start writing your management plan, one of the things I'm going to ask you is what are your objectives for the property? And you tell me, I'd like to make some revenue from this. I would like to make sure that it pays for itself. I'd like to make sure that I'm revenue positive within this time period. Those are showing profit motive, right? My intention would be to sell it within so many years with an appreciation in value, whether that's from the timber or the land, right? So the management plan is a good way to kind of establish what your profit, that you have a profit motive. That does not mean that you can't put on there that I also have recreation objectives, that I want to favor some deer habitat or quail habitat or songbird habitat. All those go in the management plan as well. I don't want to downplay that. But from an IRS standpoint, when they are looking for evidence and you slide them that management plan, having that profit motive as one of your top objectives, one of your primary motivations, is going to go a long way in that facts and circumstances to say that you have some kind of profit motive. So if you fail this profit motive, right, you can't show a profit in the last 3 of 5 tax years, does not mean that you're not a trader or business or that you're not an investor and that you're doomed to be a hobby. What it does is it opens the door to allow the IRS to start making more questions about it and really start digging into what you're doing, how you're doing it, and what your motive really is, right? So you can still have that profit motive, fail this test, and now we're going to try to look at all these other indicators to kind of see if it really holds up as truly a profit motive. So let's look at some of these other factors and questions that the IRS might look at. So these are some of the general ones. I'll go through these in detail, but your hobby test, which is what they call it, a hobby test, is it conducted in a business-like manner? Does the taxpayer or paid advisors or staff have the expertise necessary to run this with a profit motive? How much time and effort is expended on the activity? Do you have an expectation of appreciation and value? File that one away. That's a really good one for those of us in forestry. What is your success in other activities? What is the history of income and losses for you personally? So you've gotten into other things, but that's your other activities. But also, what does this activity look like over time? The amount of occasional profits earned, the taxpayer's financial status, elements of personal pleasure. And then this is the big one for us, is the facts and circumstances. So let's kind of start digesting these in pieces and putting some meat on the bones on this. So if I look at the business-like manner, what does that mean? Well, it means that you're trying to make a profit, right? That's ultimately what they're looking at. So they're going to look and see if there are any years that you've made profit. So you couldn't meet the 3 of 5 years. Have you had a profit in any year, right? So from time you started till now, right? Are you keeping your records and your checking accounts separate, right? So any of my business records need to be separate from my personal financial records, right? And so I don't have commingled checking accounts. If I want this to be a business or even investment, we tend to keep these things separate because we want to be accountable and say, hey, look, my business is making money, right? Because a business person, if I open a coffee shop, I want to be able to say, I'm making money with that coffee shop, right? Or this coffee shop is not making money. I have people in here all the time, but I'm not making any money. That separate checking account is going to be my proof of how things are going, right? That I can go back and I can look at that and I can see the only cash inflows were out of my personal checking account loaning money to my business, or that I had income from all the sales, right? That would be how I would look at it for my coffee shop. That's how you need to look at your forestry operation, or your forested property, right? The whole, when I call it an operation, I don't mean it to sound so mechanical, but we are trying to show it's a business or an investment, that we want to look at it and say everything that's enraptured in that forested property, can I say that it's making money or not? And that separate checking account allows us some kind of proof of that, if you will, even if you don't have an income statement to show. That's another good way to do it, right? I would also tell you that you need to keep records. And so any good business has records. They have records related to what they've been doing, how long they've been spending doing things. All that needs to be kept, right? So all this is like treating your business like a business, right? If I have a hobby, I probably don't keep records of how much I spent, right? Because maybe I don't really want to know how much I spent, because it might show me that I probably should stop, right? And so keeping records, keeping a separate checking account, running of the money allows us to really say, I'm keeping track of this. And at some point, if it's just eating my lunch and it's nothing but a sink of money, then maybe I'm going to stop, right? Doesn't mean I have to say I'm going to stop, but this is how businesses look at things, right? Do you have a business plan? Again, for us in forestry, when I say business plan, I'm really talking about a management plan. Do I have a management plan that tells me how to operate, what I'm going to do, when I'm going to do it? And then am I putting it into play, right? It's great to go get a management plan or a stewardship plan written, but then actually ignoring it doesn't work. You have to kind of follow through with it. And then I want to talk a little bit about this legal entity. Don't think that just because you have filed in the state and you have made it a separate legal entity, that that automatically means that it's not a hobby. These legal structures can be put in place. We see people do it all the time. Families will put their property into a legal entity. And part of that is for transition purposes, for passing it on to the next generation, right? But it doesn't, and it also has some protection against lawsuits, right? To protect you as an individual from lawsuits, but it doesn't necessarily mean that you're operating as a business and like a business. And so we're looking at you as an individual and your activity within the business entity that you have set up. We'll talk a little bit about that legal entity structure at the end. But I want to say that just because you are in an entity structure doesn't mean that you personally are operating as a business. So then we can look at the factor of like the expertise of the taxpayer or the advisor. And so one of the things that they're looking for is, do you know what you're doing? Right? Rarely, okay. It does happen, but it shouldn't happen. Does somebody open a business and not know what they're doing, right? People that open a business, especially if they need to go get a loan to open the business, have done some homework. What does it take to run a business? What does it take to run this specific type of business? And so what they're looking for is that if you have decided to get into forestry, that you have some knowledge of what you're doing. Okay. And so that means that you have an idea, the kinds of trees that you're growing out there, what you're trying to do with the trees out there. And that if I'm lacking in knowledge in a particular area, that I go try to educate myself on it. And so there's so many ways nowadays to educate yourself on a particular business, right? So if I'm just getting into forestry and I'm trying to learn how to do it, maybe I inherited the property and I want to run it as a business, but I don't know anything about it today. You have the opportunity to go to extension classes. The Cooperative Extension Service is located in all our states through the land grant programs. Um, and you can go to them. Often they have people like myself that are specializing in forestry that can talk to you about what it means to have a forest. How do you manage it? What kind of decisions do you make? How do you keep it healthy? How can you make money from it, right? So you can take those classes. They're often free or very low cost. You can also see this with the state agencies. Most state agencies have a forestry organization within them that will have a service forester that can come out who can talk to you on the property so you can seek their advice. They come out, you could say, well, what should I do over here? It looks like I'm having a beetle issue. Seek their advice. And document that you're doing this, right? So when we go back to the business like manner, we're documenting things, right? I went and I took a class through cooperative extension to learn how to mark a stand for a thinning. I went and had a service forester come out or a consulting forester come out, met with me on the property, talked about how to protect my property from timber theft, timber trespass, right? And then do the things that the professional assistance tells you to do, right? So the forester comes out, says, this is what you should do. You make note of it, you do a little bit more research, and you document that you're actually following through or have decided not to and why you didn't do it. So you're giving yourself some expertise on it, right? Or that you have a forester that is working on your behalf and that you have the right people working for you. This is a factor that says this isn't just a hobby. Then we can look at the time and the effort expended. And again, this is where the documentation comes in again, right? And this is going to sound painful to some folks on here. Put a spiral bound notebook in the truck and keep a log of when you go out to the property. And when you go out to the property, what are you doing out on the property? How long did you spend out there? I was out on the property for 2 hours today. I met with the service forester to talk about steps to take in order to harvest the timber on the property. Okay, those are the kind of things that people in it for personal use or hobby are not as likely to do, right? And then just showing the sheer number of time that you spent out there. And so we're going to look at some numbers here in a minute, but I want to say that you're trying to build this case that you are putting effort into this. And the time and the effort that you're spending out there need to be something that's appropriate for somebody that's profit seeking in forestry. So 2 hours a year effort on the property doing things related to the business isn't something that somebody in a profit does. Somebody that's in a profit motive in forestry is going to have significant time in there. That includes being on the property. That means discussing the property with others, researching things to do on the property, taking classes, documenting things, talking to experts, all those kind of things. That's what's appropriate for somebody seeking profit. That's not to say that's thousands of hours. Let's be really clear. And we'll talk about that number in a little bit. And then, of course, I mentioned earlier the expectation of appreciation and value. So a lot of hobby things don't necessarily have an expectation of appreciation and value. This is one of the really positive factors for forestry. If you have forest land, one of the things we know about land in general, whether it's ag land, ranch land, farmland, sorry, forest land, that has an expectation of appreciation value. we are not making any more bare land. We're not making any more rural land. And so value of land in general tends to appreciate in value. And that appreciation in value is one of the things that we can say, look, I have a profit motive. I bought the property, I received it as a gift or an inheritance, and my reason or my motive is to see money come off of this, even though it might be longer term, which would put you in kind of an investment mindset, or I have expectation that the growth in the timber, in addition to the value of the land increase, ultimately is going to make me profitable. And so the timber is the other really kind of interesting part about this. When we talk to people about investing in forestry, clearly we can talk about increases in value of land, but the really cool thing about forestry as an asset class is that we have this tree growing on it, right? That unlike so many other things, that doing nothing, the tree will grow. And so as the tree grows, it's putting on more volume, right? Quantity is increasing. So from start to finish, barring a catastrophic event, I have an increase in the amount that's out there. That growth of the timber, just purely by growing, I have an increase in value because I have more of it over time. Of course, the longer you have it, the more it'll grow over time, right? But in addition to just that pure growth, we also have this quality indicator, right? So if I think about growing timber here in the South, we'll go from something that is small, that is going to be maybe chips, right? That is a very low quality product, but it's consistently growing, so it's making more of it at all times. But once it hits a certain size, I can put it into a pulpwood category. At another point in time, it'll cross from that pulpwood size into a small saw timber, assuming that it is a straight and free of defect piece of wood. And then ultimately it can go into saw timber, which would make lumber, maybe into poles for telephone poles, right? Or veneer if I have high quality hardwoods, right? So as we're going up in size, we're also putting on more of it, and we're going into higher value products, right? So that's giving you an appreciation in value just by holding it. We can look at your success in other activities. Have you done this before? Have you ever had forest land before? Yeah, I've had forest land 15 years ago. We moved, so we sold the property. So now we're just now getting back into it. So you've done it before. That does kind of tend to lead to you have a little bit knowledge of it. So back to that expertise, I would say, yeah, I've done this before. So I do have some knowledge. But now because I've done it before, we can look at my track record, right? How did I do when I did it before? Well, when I did it before, I was just starting to make money from it, and then we moved, and so I sold it, right? Have you done anything similar to it? So maybe you didn't have forestry before, but you've owned a farm. And so you took that farm and you moved it over, and you sold the farm and you went into forestry because you were more interested in a longer term asset, right? So you have some background in doing this kind of activity. The farm was successful, it made money, that gives you it. Even if you did something dissimilar. So what if you ran a nonprofit, and so you have experience in running a business or running an investment, even though it was a nonprofit, you understand how to make money, how to keep track of funds, right? And how to operate in a business-like manner. And so the success in these other activities of your life can be a contributing factor. I can also look at a history of income and loss within the property, right? So that presumption of profit motive looked at just that short window of time, the 3 to 5 years, but we can go outside of that time frame if we're having this conversation and say, well, if I look back over the entire time I've owned it, so I've owned it for 20 years, you know, that I had losses at the beginning, which is fairly typical. I had to put trees in the ground, it was bare dirt. So there were some losses up on the front end from the startup expenses. If you look at going forward from today, here's my management plan. In my management plan, I'm going to show you that in 7 years, this is slated for a harvest. And so at the time of harvest, there will be positive income. Here's growth. because this is what a forester will do for you in a management or a stewardship plan. Here is the growth and yield projections of the timber that would be removed at that point in time, 7 years from now. That in itself would be a way to show that that would be positive income more than the loss that you've had, right? Were losses that you have been incurring in that 3 to 5 year window, are they beyond your control, right? Uh, for many, many parts of this country, if we were to look back 5, 8 years, you know, I can, in that 8 year window, I can look at almost any region in this country and we can talk about a major catastrophic loss situation, right? In 2018, 2021, 22, 23, 24, we've had hurricanes in the South, right? And so pretty much every state in the Southeast has had some fairly large losses within the last 3 to 5 years due to one hurricane or another. I can go to the West Coast and we're having fires at this point, catastrophic fires in California, Oregon, Washington, almost every year at this point. So we can look at those as losses beyond control. Northeast, maybe it's ice, right? And we have these issues every year. And so are the losses that you're showing beyond your control? You can't stop that from happening. And we certainly can't pick the asset up and move it somewhere else to be safe. And then how are you going to show all this history of income and loss? Again, it's having good records, showing what's been going on. Maybe this is, small losses over time, right? But we're trying to show what's been going on and having that cash flow, which again is something that's part of a management plan, would be to show you what that looks like. Again, you don't have to have a professionally produced management plan. You can produce your own management plan. There are organizations within many, many states. Some of them are tied to the tree farm program or your state landowner organizations where they have some templates. NRCS has templates. You can do some of your own management planning, but what these pieces I'm talking about are the parts that are going to show the profit motive and that you've thought about this and planning beyond today. So many reasons to have these documents. This is a big one. So we can also look at the amount of your occasional profits. So, it's one thing to look at that timeline and see that you had a profit last year, it was $100. That's not very big, right? But if I look back and I see that 7 years ago, which is outside my 3 to 5 year time frame, right? So I didn't meet the presumption, but 7 years ago I had a thinning, and it was a commercial thinning, and it was a large gain that year. And that large gain is then followed by the next year I did a fertilization. And so I had negatives that year because there was no income from it that year. And then all I had was just operating expenses since that time period, right? So those are small reoccurring losses because I'm doing my typical management expenditures. And then every once in a while I have a very large gain. And so all of this is couched by wherever you are in that rotation period, or the life cycle of your stand of trees. And so I want to acknowledge that not everybody's on a rotation start to finish, like we might be in some of the southern pines, but knowing that maybe if you're in hardwood management, right, that you've got uneven age management, that every 10 years maybe you're going and entering the stand and removing some of those trees, and in between you have these small recurring losses, and then you have another one. All of this is what's going to show up in some of your planning documents. What is your financial status as a taxpayer? Is this your only source of income? If this is your only source of income, that tends not to be a hobby, right? That's one of these kind of big factors is you've got to have some other source of money, if you're in a hobby and not making any money, right? If you are only trying to generate losses, right? So you've got this massive history of losses. I look at all these other indicators. They're not hitting any profit motives. And then I find out that you've got a well-paying day job and you're just trying to generate losses from your forestry to offset your income. That's not going to pass a smell test, right? And then part of, thinking about your financial status is, what is your why? Why are you doing this? So when I start talking to you, back to those first questions I ask you, why are you doing this? And you tell me, I'm trying to make sure that I have a financial source for my future. That when I feel like this is ready to go, that I'm able to leave my day job and I will have the income to kind of keep me going off of this, right? This is going to pay my future expenses, right? So I'm trying to make money off of this. That's part of your why. If your why is because I really want somewhere to go to just get away from it all, that's going to put you in that hobby or personal use, barring any other really strong evidence to the contrary. Again, I want to make very clear that not one of these is the determining factor. So this goes right with that, right? The elements of personal pleasure. Would you keep doing this even if you never made any money? Some of you would say yes. That's not a nail in the coffin, okay? Is your fun outweighing the effort and the gain? Sometimes it is. I'll be honest with you. I'm a forester by training. If I had land, I would enjoy managing the land, right? I would be trying to make money, but I also would enjoy what I was doing. But again, you go back to all these pieces, right? I have the expertise. I'm educating myself. I got a management plan. I'm trying to do everything possible, keeping business records, right? This test, this personal pleasure, is a really, really tough indicator for forestry, because I think for a lot of folks, this would hurt us, right? Because the people that get into forestry, in a lot of cases, it is not only a profit motive, but it also has elements of personal pleasure. So again, what are you saying when you're asked about what this property is? And then we're going to go to facts and circumstances, because not any one factor, there's like 9 factors there. Not any one of those is going to actually make the critical decision. Now, if one of those is so clear, so heavy, and nothing else is very strong, so you've got this preponderance of evidence that points one direction, it's going to lean that way, right? And so they're going to look at everything. They're going to look at what this compares to the typical landowner and see how this lines up. Your neighbor is out there doing all these things. You're not doing any of these things. Is your neighbor operating outside of the normal? They just really, really are doing above and beyond, or are you just not doing enough, right? And so this is why it's tough. And I will tell you that if you're sitting with an auditor, having a forester who can talk about what you're doing and you talking about what you're doing are really going to be useful for you. So why does any of this matter? I mean, I just spent all this time talking about these factors and these determining questions. Why does it matter? Because your ability to deduct expenses hinges in some cases on which of those categories your activity is bucketed in, right? So if I bucket you as a business versus a hobby, that's going to matter on what you're allowed to deduct. It can matter about how your income is treated and which form it goes on. And then it's going to matter when we talk about handling losses, the part that we don't ever really want to talk about, but in reality can be an issue. So just to complicate this one more step, and I need to do this right now before we talk about handling any of those other pieces, we break businesses into passive and active. And so a business is considered a passive activity if the taxpayer doesn't materially participate. Yes, this is just confusing the issue if you really want to know, right? So remember, you're in the business if your activity level, frequency of income and activity is greater than an investor. What's greater, right? Again, back to that. And you're treating it like a business-like manner, right? All of that helps make the case that you're a business. But once you make that decision, then we're going to subdivide you into whether you're passive or you're active based on meeting some material participation rules. I'm going to point you to this Pub 925. This is an IRS publication. It goes into passive activities and material participation in great detail. I'm just going to kind of breeze through it, but I want you to know that there are resources available to kind of break this down and kind of help you figure this out. This is where numbers start coming into play, is if I'm looking at material participation, I can ask you, have you done more than 500 hours during the tax year on activity on this property, right, in this business? So for this business, can you clock more than 500 hours? Okay, doesn't matter what anybody else did, right? Can you and your spouse can be counted with you, can you clock 500 hours? And that 500 hours is on the property, in your office, paying bills, going through educational stuff to better understand how you're going to do the thinning, right? You're going to meet with a logger, you're working on the contract with the logger, you're meeting with a lawyer to make sure the contract protects your best interests. All of this is part of your 500 hours, but you got to document it, right? So again, back to the spiral bind, if that's what you have. Nowadays, you can be doing this on your cell phone. Keep a log on your cell phone of the time that you spend. Get more than 500 hours, then that is not going to be considered passive activity. You'll meet the material participation rules. You'll be considered an active business. If you have substantially all the participation during the year. So you don't quite meet 500 hours, but you have more participation on the property, on the activity that in the office, on the ground doesn't, I don't mean to differentiate it when I say on the property, substantially all the participation, that means you've done more than anybody else, right? And so if I look at I've hired a forester. The forester comes out and his job is to monitor the logging job, right? And so if the forester comes out and watches the logger and he clocks 50 hours on that logging job, doing some monitoring, and I've got 200 hours, then I've done substantially all the participation during the year. We can look at the fact that you have more than 100 hours and at least as many hours as anyone else. So I have 105 hours and the forester has 105 hours, then we're good, right? So I've got more than 100 and at least as much as anyone else. Nobody has more than me, okay? I can look at this significant participation test. And so significant participation means I take all my activities that I have and on multiple different things that I do, and I add them all together and I pass the test because I've added them all together, right? So I totaled all my activities. That means I have significant participation, and that allows me to look at only some of them meeting other tests, right? And so it's a little bit of a complicated test. I encourage you, if you have multiple activities, to look at this significant participation as another way to meet material participation rules. And then ultimately, we always have the ability to look at facts and circumstances to decide whether you meet the active participation, material participation rules. All right. So if we look at, from a business standpoint, generation of income, what does it matter if I'm active or passive? So if I have a timber sale on my property that is operated as a business and I am considered passive in this activity, I did not meet any of the rules, that income is going to be subject to the net investment income tax. This is an additional 3.8% tax on passive income that's capital in nature. Okay. And so that's an additional tax you're paying. If you're considered active, you met the material participation rules, then your income from that timber sale would not be subject to the net investment income tax. So right off the bat, you can see how important it is to decide if you're in the business and if you're active or passively participating in that business. When we look at losses, right? So sometimes expenses are greater than losses, or sorry, expenses are greater than income. That would be the definition of a loss, right? So I have a net loss. If I'm considered a passive in this business, then any of my net losses are going to be carried forward. So I can only take passive losses to the extent of passive income. So I'm going to set those two things offset, and the minute it goes over, it goes into the loss category. I'm going to carry it forward to future years when I have other passive income. Okay. If I'm considered to meet those material participation rules, and so I'm an active participant, then my net losses are fully deductible in the year incurred. Again, this is another reason to kind of understand where you fall and whether you're going to meet these rules. So now let's look at expenses. And now that we're in expenses, I'm putting all four categories of people on the slide. I want to make sure you're seeing that so you understand kind of where we're at with that. So those in the business are going to be able to deduct all ordinary and necessary expenses incurred for the production or collection of income. Again, subject to that net loss rule, right? So if I'm passive, I can deduct all those expenses up into the point where the overall enterprise is operating at a loss. And at that point, I can't deduct anymore. I'll hold on to them and I'll roll them forward in a loss for future years, right? If you're considered an investor, if this is an investment property for you, an investment activity, you're going to deduct the expenses associated with the production of income. However, we are currently operating through the end of 2025 under rules that suspend miscellaneous itemized deductions. Miscellaneous itemized deductions is a category within your itemized deductions where investors are taking off the expenses associated with production of income. So that's suspended. That came through in the Tax Cuts and Jobs Act of 2017. That is currently in effect until the end of 2025. We are waiting to hear whether that will be something that President Trump will extend in his tax package that has not come out, or whether that is something that will be allowed to expire at the end of 2025. Should that expire at the end of 2025, then we will see a reinstatement of miscellaneous itemized deductions, and investors would then take these investment expenses as a miscellaneous itemized deduction. As it stands today, the end of January 2025, without any change to that at the current time for past years, right? And assuming it is to be extended, then you will not be able to deduct those expenses in your miscellaneous because they're suspended. You can still deduct your property tax. That is something that is still allowed, right? Because we have other places we can do that. But they are limited through the state and local tax deduction. It's called SALT, right? The SALT deduction is limited to $10,000. And so that is going to be one of the restrictions if you're an investor and you can't use miscellaneous itemized, you'll roll it over into your property tax subject to that limitation. Any of the other expenses you can capitalize as carrying charges, carrying expenses. What that means is you make the decision and you roll those over and they'll become part of your basis until such time as you start harvesting or have any kind of sale of the property. That's the only time you'll be able to take those back. If you're considered in personal use activity, there's no deduction for your expenses. That's not to say that your property tax, you have the same ability to deduct property taxes subject to the SALT limitations, and your interest expenses associated with a mortgage taken on it, assuming it's for personal property. You can go ahead and deduct that in the same place, assuming you itemize, right? If you have it for a hobby, there's no deduction for any expenses either. And that is also, you can take the property tax off as well. Again, this is why I spent so much time trying to help you differentiate what category you might be considered to be in. All right, so now if we look at income, and so income, we have a couple different ways of harvesting and the way the contracts are structured. But if we start from timber that is sold on the stump, right? So a stumpage sale, you sell the timber, you sell it to a corporation who brings in their own loggers to take care of cutting it for you. Sales sold on the stump qualify for capital gains, assuming you held the property for more than a year. And so for a business, so if you're in the business, this is going to be a section 631B sale, and it's going to go on form 4797. If you are considered a personal use, an investor, or holding it as a hobby, you still have to do this as treatment of income, right? This is for personal use. This is assuming that you've actually sold the timber, right? You've sold some timber. It's all going to be considered income. If you sell it lump sum meaning I put it up for bid, I got one amount for the entirety of the timber, right? It's not on a per unit basis. It's going to go through a section 1221, which is going to be reported on Schedule D. If you have a pay as cut sale is usually a kind of sale where the buyer says, I will give you X dollars per ton, per cord, per thousand board feet of timber that I cut. And so if you have that kind of a sale, it's going to be considered a section 1231 sale, and it'll go, which goes through section 631B, and you'll put that on form 4797. All right. Some of you may actually sell logs and not be selling the standing timber, right? Selling logs occurs when you have hired a logger, had them cut the timber for you, and you tell them where to take the logs, right? And their job is to deliver the logs for you. So you're incurring the cost of all the harvesting by paying the logger for you. And so in this case, these sales are considered ordinary income unless a section 631A election is made. So if you're in this is typically done by those who are in the business. And so they would take the gain from, so a 631A sale, you're breaking that sale into two pieces. The gain from growing the timber up to the point of time of harvest, that gain is going to go on form 4797. That'll be your capital gain component. The gain from selling the logs, and that's going to be including all those harvesting expenses, that's going to show on Schedule C. Those of you who are doing this and you're considered personal use, this is going to be ordinary income when you do this kind of a sale when you sell logs because you don't have a profit motive. And so it's considered non-self-employment income. So there is that side to it. I'd highly recommend if you're considering selling timber or have recently sold timber to reach out and look at some other resources that talk about how to treat timber sale income. This is really just a really brief how to look at it from different activities. So the next thing we want to look at is how we're going to handle losses. And the handling of losses, this is where whether your business, investment, or personal starts to matter again. Operating losses, we already talked about from a business, it depends whether you're passive or active. If you're an investor, and this is an investment property for you, and you have an operating loss, meaning your expenses are greater than your revenues from the property, you're allowed to take a deduction for the operating loss. If this is a personal property for you or a hobby, these losses are not allowed. You cannot deduct expenses that exceed your income from either a personal or a hobby. That's why it's so important to understand and to be accurate in and not get into those categories unless that's truly representative of what you're doing. Now let's look at the casualty losses. This gets a little bit more complicated. Of course, I mentioned fires, ice storms, tornadoes, hurricanes, shipwrecks are included. Not that that really is too much of an issue for us in forestry. Casualty losses. This happens when we have a sudden, unexpected, and unusual event that qualifies as casualty losses. Again, not going to get too much in the weeds on a casualty loss, but if you are considered an investment in this activity, your casualty loss is going to be treated just like it would if you were in the business, and the casualty loss is going to be deductible. uh, for the greater of your adjusted basis in the property or the decline in fair market value. There's a lot of stuff that you need to read up on that. I threw the word basis in there. If these are unfamiliar terms, I'd encourage you to go back and look. We have some webinars that deal specifically with casualty losses. There's one that I did related to timber that would help kind of clear up these particular rules and kind of help you with that. If your property is personal use and you have a casualty, it has to have occurred within a federal disaster area. Every time we have one of these big natural disasters, you see this federal disaster declaration. There is a list that is out with the IRS, so you can go find that. Usually you know about it because they've extended your time to file your tax return. So if you've heard that about your area, that likely means that you were in a federal disaster area. So if you're in a federal disaster area, you can take it as a personal use, but you're going to reduce that loss by $100 and 10% of your adjusted gross income. So there are very real limitations to casualty losses for those who have personal use property. So just to kind of bring the business part back to this loss part, operating losses, if you're an active business, an active participant, the losses, operating losses are allowed. If you are a passive business, then they're allowed up to the extent of your passive income, and then you carry forward those losses to future years. Your casualty losses, those are fully deducted regardless of whether you're active or passive. So I want to kind of wrap this up by getting back to this legal structure, because I told you that legal structure may or may not be an indicator of whether you're in a business, an investor, personal use, or hobby. Legal structure are these definitions that tell us who owns the land, right? Is it owned by an entity, right? Um, I don't know, Cushing Land and Timber. That's who owns the land, and that might be a limited liability company. That might be a partnership with me and my brother-in-law, right? That's just telling us legally who owns the land. That does not talk about activity. It doesn't talk about really what's going on. It's just a definition from a legal standpoint. It has tax implications, which is what I've tried to show you today, is that there are tax implications on the business investor side and all that, but there are also tax implications in whether you're a C corporation or S chapter corporation, a partnership. All that matters in your tax implications, and mainly which forms you're filling out, whether it's double taxed, right? It's taxed at the entity level and at the shareholder level, or whether it flows through like a partnership and goes to each of the individuals. So it matters what that tax structure, what that legal structure is. It also determines liability, right? I need to know who's responsible if something happens on the property. If somebody has a loan on the property, who's responsible to pay for that loan, right? Is it the entity or is it the individual shareholders, right? So if I own shares in a corporation, I usually have zero liability related to whatever the corporation does. And that's what that C corporation does, is it creates that wall between the entity itself and the people who benefit from pieces of ownership. If I own it myself, there's usually there's no limit to my liability. So we have all kinds of structures that have ways of limiting liability while also giving you different tax implications. I will say that there's no right answer on what the right legal structure is. You can set your legal structure up. It may be helpful to kind of make the case you're in the business, but it won't necessarily be the defining factor. So it should not be the only reason why you set up a particular legal structure, right? Legal structures have all kinds of implications. So these discussions have to happen with an attorney, right? So get professional advice before you set up a legal structure, and definitely don't do it just to try to prove you're in the business. So the burden of proof on all of this, whether you're a business, an investor, in a hobby, all of the burden of proof is on you, right? If you get audited and the case that they're trying to make is that you're actually a hobby, your best defense is having documentation to show what you're doing, how you're doing it. And make sure that that documentation wasn't written up yesterday, right? That, because whether you know this or not, right? I can open a Word file on my computer and I can sit here today and I can make up 5 years worth of whatever I was doing on my property. And when I sit down with the auditor and I give them that file, they can actually look at when the file was created and they can see that I created the file today. That's going to be a problematic, right? Versus if I originated the file 5 years ago and just modified it yesterday, that's a little bit different, right? And so they're going to look for those kind of things. If you've got a notebook and it looks pristine, that might be questionable. If you've got 5 years worth of data in a pristine looking notebook, any notebook I've had more than a year looks pretty beat up if it's been laying around, right? So document things, but be reasonable about it and don't try to pull it off the last minute. Be documenting all the way through what you do. It's always easier while it's top of mind. Write it down. I went to this. This is how long I did it, and this is why I did it. Um, it's often not black and white, which is why we're having a conversation with the auditor. It will be stressful. I can't tell you any different. It will be stressful if you're in this situation, but know that it's not black and white. There's no one piece of evidence that will say one way or the other. It's this collection of evidence that will push one direction or the other. And it's going to have to be reasonable, right? And then I would say, does it pass the smell test? I've been running this tree farm for the past 40 years. I made money 1 year out of 40. It was $5,000. I've taken losses all the other 39 years. They've been pretty big losses some years. That doesn't really look like a business because no business would operate that way, right? So I'm trying to give you a very extreme example, but I will tell you that that's the kind of thing that doesn't pass the smell test. But so many of them are not clear at all. And it's going to come down to what does it look like really? So with that, I wanted to give you some contact information to reach out if you have questions, if I can help clear some things up. And I'm going to stop sharing so that we can see if we have any questions. Looks like you all have a few. Okay, I'm going to preface this as we get started by saying it depends. And I know that's a very unsatisfying answer. Unfortunately, it's an answer I have to give fairly frequently when I do tax programs. I also have to give it to my undergrad students here at the University of Florida in economics. It often depends on so many things. So the first question I see is what category would a social familial cooperative with real estate development sold within a private community be considered? I feel pretty certain that for a lot, see, this is going to come down to the individuals within this, right? So I want to be really clear that it's not like a blanket across everybody, but we're looking at each of the people involved. And so if we had someone who was actively engaged in this, one of the family members who is doing the day-to-day work on this, they are likely to be at least a business or investor, right? But I could also be a member in that and I'm just taking the check, right? And so I don't really know anything about it. We're definitely moving me to an investor, maybe less than that, right? So again, not very satisfying answers. There's so many, it depends, so many pieces of evidence that one sentence questions aren't going to give me. Can the timber be included as part of a farm and documented via Schedule F? What a great question. Absolutely. So oftentimes we have, in fact, Janet and I were talking about this just before we started, that I often have forest landowners that's all they have. Or I talk to farmers who identify as farmers and find out that they have the back 40 has trees on it, and they actually do have some forestry operations. And so you do completely have the ability to put things on Schedule F. Know that there are some times that you want to be included, that income to be part of the farm, and other times you do not want it to be part of the farm, right? Because it can be considered ordinary income if it's incidental, if it's part of your farming operations, why you remove the trees, right? Instead of with a forestry purpose, then that would be ordinary income versus capital gains income. Um, or included within CRP expenses on Schedule F. So, CRP is a little bit complicated. CRP is a cost share program, and that cost share program has a couple pieces to it. Part of it can be rent, part of it is for actual operations that are happening that are truly the cost share part. And so I'm going to kick that question, ask you if you would like to give me a little bit more detail, just to send me an email. I'd be happy to get a little bit more detail on that with you as far as an answer. But generally, if you are filling out Schedule F, there's a lot of places where you can just move your forestry operations onto that. I will tell you at this point that Form T is a very helpful document that is out there. It's not been updated in years, probably since 2013. Nothing's really changed on it. Form T allows you to kind of think through the forestry operations, helping you establish a basis in the timber, talks about the timber sales, the way the timber is being sold, taking the depletion, which is just the recovery of basis. So even if you're using Schedule F, I would encourage you to look at Form T and kind of keep your timber documented on there, your operations, because it's a really great way to organize in a way that talks in a forestry language versus crops. If I purchase a woodland with the intentions of selling it in the future for a profit, can I treat an occasional timber harvest as a reduction in basis rather than income in the year that the harvest occurs? Okay, so that's a really good question. And so I'm not going to get too deep into the weeds on this one, but what I will tell you is the way we recover our basis is simply what we have invested in an asset, right? So if you bought the woodland and it had trees standing on it at that time, and you took that purchase price and put some of it on the trees and some of it on the land, right? What happens when you do that timber sale is you recover some of your basis to the extent of what you cut. So I'm going to like make numbers up for a minute. So if I think about pines and lines, because that's the easy way for me to do this, and I take a third of the timber that's out there in the form of a thinning. So I reduce the timber out there by 1/3. Then I would take 1/3 of what's in my timber basis account and use that amount to go against the income. Now it will not completely offset the income from that sale. So you're always going to, as long as it's a commercial sale, you should show a gain from that sale. So what that winds up being is, if that's the only harvest you do before the final harvest, so back to my pines, then you do a clear cut 10 years later of those pines, you would take what's left of the basis in that pine stand to offset the income generated from that clear cut sale. I hope that helps. If you need some more information, if you need more resources on how to think about basis and what's called depletion, depletion is our recovery of basis against income. Go ahead and send me an email. I'd be happy to send you resources, including some videos or even answer some questions for you. And then additionally, how are losses due to emerald ash borer filed? Okay, so insect losses are typically not considered a casualty loss. That's an unfortunate reality. What I said, if briefly in there, was that it was sudden, unexpected, and unusual. And what we know about insect losses is they are rarely sudden, unusual, and unexpected, right? It's a normal part of owning trees, right? And the key real piece there is that it's not sudden, right? Insects rarely kill the tree immediately. It's usually happening over a period of time. The insects attack. You start to see some deterioration of the tree. Like I have a pine tree at my house. I've watched it die, right? So it doesn't die immediately. You start to see the pine tree go from green. It has some needles that are kind of red up there. And then what I see is that red spread, usually in an insect attack. we see it happen at one tree and then we start seeing it spread out in kind of rings. That would be what we see in the southern pine beetle. I'm not really sure how we see that manifest with emerald ash borer. I apologize, but that means it's not sudden. The tree didn't die suddenly. And so you can take some loss due to it, but it is not a casualty loss. And so again, if you want to send me that question along with the one on the schedule, the CRP treatment, be happy to answer that with some detail and give you some resources that will really talk about how to handle losses from insect and diseases. Great questions. Anything else?
Okay, if anybody has any additional questions, go ahead and drop them in the Q&A. And while we're waiting to see if anyone has any more, I'll just let everyone know that this session was recorded and the information will be sent out via email to everyone who registered. It will take a couple of weeks for us to get the recording up onto the website because we have to do transcriptions and get that information correct and clear before we post it to our website. In the meantime, you can check out the farmers.gov website where previous webinars have been posted. You can also check out rural tax education and the agftap.org websites for information on various tax and farm and ranching and timber topics. Looks like something else popped up into the Q&A, Tamara.
Oh, yep, got it. In the EQIP program to pay for forestry planning, been paid, and also the forester, how is that handled tax wise? So EQIP, there's a code section 126 that deals specifically with cost share. And so those cost share dollars are eligible for exclusion unless you elect not to. And so there's a formula for you to use to calculate that. There was also, I did a webinar on that. Janet, I think that was April of 2024. That is also available to look at. And if you'd like some more information, you can also send me a message and I'd be happy to get you some more detail on it. But it's a formula. But at the end of the day, what I'll tell you is for several cost share programs that come from the federal level, you do not have to claim all the income. You are eligible to exclude some or all of it, depending on what you got the money for and some calculations we need to use. Any other questions? These have been great questions. I appreciate some good questions, and anything I can be of use of to you. Again, I spend my days doing forestry taxes. So if you or your advisor needs some help on that, feel free to reach out.
Okay, so thank you so much, Tamara, for joining us today. Everyone else, thank you so much for joining us. This is our monthly time with tax experts on different topics, and it is through the cooperative agreement that Tamara mentioned earlier. And please join us, and wherever you found the information on this one, that is where we will continue to put that information out on upcoming webinars. Thank you guys so much and have a great day.